Hello, and a massive hello to everybody. Hope everybody's having a great weekend. This is 50 pips rocking and rolling here, 1st of November, 2015. Not making any trading calls or recommendations because you and only you are responsible for the trades you may decide to take. The fact that you're in here means you've read, you understand, you accept all disclosure disclaimers here on the website, and or else understand that we're just performing some live technical analysis and learning context for educational purposes only. So, what's going on as we hit November, guys? It should be a very interesting week shaping up. So helmets on, we have a lot of stuff on the data front, so a lot of event risk. So we're kicking off Monday, which usually can be a bit slow days, right? But we've got a lot of stuff. Monday's going to be an interesting day. We got building approvals out of Australia, and then we got all the PMIs, right? Starting from China, in Europe, UK, US. So it's going to be a very interesting start of the week, especially the way we close, to see if the momentum continues or not. On Tuesday, we've got RBA rate statements, so basically rate decision out of Australia. We've got construction PMIs out of UK. We've got GDT price index on Kiwi, so on New Zealand dollars. That was going to be interesting following what happened last week. And then we also have the unemployment data out of New Zealand, with Draghi speaking in between. So another second day of the week is going to be interesting. So in case you think the fun was going to, games were going to end, not at all. On Wednesday, we got retail sales out of Australia. We got trade balance out of Australia. We got more China data. We got Draghi speaking again. We got the services PMIs out of UK. We got ADP out of the US. We got trade balance out of the US, out of Canada. We've got Yellen testifying. We got ISM. So again, we got the RBA. So, Wednesday, another full day. Then Thursday, we got the inflation report out of the UK, we got MPC votes, we got the monetary policy meetings with the rate statement. So again, Carney speaking, unemployment claims out of the US, a bunch of other second-tier data out of the US. And then on Friday, as if we hadn't had enough, we got a monetary policy statement out of the RBA, we got man production out of the US, we got unemployment out of Canada, and basically we got non-farm payrolls out of the US. So again, it's going to be a fairly interesting week where there's probably going to be a lot of stuff moving. So it's going to be interesting. What are the charts telling us? Well, the charts, we ended last week some interesting action on gold, right? We're still looking for rotation higher in gold, and we're looking for a move back into the 1200. We got up to about 1190s and then completely coming back down hard, right, following FOMC. Now, in terms of where we stand, globally speaking, we are still stuck inside this 100 and this 200-day moving averages, and we're back at the pivotal level inside the range, 1150, 1200, 1100. So again, I think you can make a good case both for this being heavy and coming back to retest the 1100s, and you could probably make a pretty good case for this trying to hold all this kind of rotation and continuing, even if we continue to retrace, to go back up the 1200, right? So I don't want to go into an awful lot of detail. I'd say choppy as long as we stay inside these two moving averages. We're stuck at mid-range. Both the bull and the bear case, I think, has merits. Because we like to take a stand and not be wishy-washy, we're going to say we still believe that the case for rotation back up into the 1200 is not over and done with, okay? So what's going on cable? Cable, we had a beautiful rotation back up off of key support. We talked about the fact that as long as we kept on getting these daily closes below this 200 DMA, there was no edge in trying to get long, right? We're looking for choppy action inside these two moving averages, but close outside to be pivotal for the next move. And we closed below this 200. Bam, came back into the next support. We said if anything, we look for longs at the next support. We put in a nice positive close on the daily here and back rotation right here. So don't forget that we're back in this choppy area, right? So this is another one where I think you can make a case for the short side and you can make a case for the long side. Don't forget there's an awful lot of data out of the UK. We still have a lot of talk of Brexit that could be moving things. We've still got a lot of M&A flows, etc., etc. So I still think that we're exactly back to where we were before. No huge surprise. We're stuck inside this choppy action around the 200 and the 100. And unless we get more clarity from Carney, from the BOE, in terms of data on Brexit or something, we'll likely continue to see a lot of chop inside these two areas. Right now, I think that it's very tempting for the market to come out and take these stops above the 155. So I would say that the gravitational pull is being exerted by the stops above the 155, and the market will likely try and take these out. And then it's going to be interesting to see what happens. This 155 pivotal level from a daily close. Daily close is above, bullish for a move back into this descending trend line. Daily close is below, bearish for a move back into the 200 DMA. Even though it's choppy, a lot of nice tradable areas, tradable opportunities around there. What's going on yen, euro JPY? We talked about this break back down and to watch out into the BOJ, that basically you don't want to get caught shorting lows, similarly to what we discussed on USD JPY. And so keep an eye that this is the big zone, this is the big area, and you need daily closes above or below to get the next leg of momentum going. And you see we pierced, we clipped some stops below here, and then we closed back positive. So here to us, this would indicate that, again, as long as these lows from last week hold, the market is likely going to try and take another little stab back to the upside into this trend line area. Where are we on New Zealand dollar? So far, Kiwi pretty much on cue. So we talked about the fact that we expected choppy action, and we said that there was a pivotal level for bull bear line in terms of daily closes, which the 68, bullish above, bearish below. We see that last week we never got a bullish daily close above the 68. So what we said, we would expect a move back down to come into this descending trend line, right? But we said that unless we close below, we wouldn't consider this a bearish development. We would consider any kind of move back down as a buying opportunity for an attempt to move back up into the 68.00 and possibly all the way into the 71.40. So right now we had a nice little move back up about 130 pips off those lows back into the pivotal level. Very, very interesting. I think we read this one pretty well. Again, no change, right? Back into 68.00. Daily close above, bullish for a move back into these highs. First, they have to take out these stops. Daily closes below, bearish again for another move back into the lows. So not a lot has changed, but fairly clear, I would say, in terms of chart. Euro GPB, our favorite structural short, still inside the range. A lot of shorting opportunities there, sold back down. Again, if anything, we would be cautious about trying to get too bearish into this support. We see a lot of two-way action. We need daily closes outside these ranges to see the next move. Right now, we're just looking at opportunistic chances to trade inside this range. No big change. Bigger picture for us is still that ultimately we'll break to the downside, and our targets to the downside are 62.60s, but that does not mean that we're going to get aggressively short into a brick wall unless you're still holding shorts from that failed breaks at highs. Then it makes sense to try and trail. Euro, what's going on Euro? So as far as we discussed this, there's an awful lot to do about nothing here inside this mid-range. We consider this mid-range areas to be pivotal for action. We don't think there's an awful lot of edge in terms of looking at a big structural view here when we're hovering at mid-range. Okay, from a bigger term perspective, we kept on talking about this in the outlooks and on Twitter that any rally was a sell. We expected the BOE to talk this down. I think we had Neuer here giving us a little present. Then we had Draghi giving us another little present. So pretty much on plan. Right here, however, we cautioned about getting aggressively short into the hole, especially into the FOMC when everybody started to get on the train. And we discussed about how the FOMC range was important, giving us some nice tactical trading opportunities. So if you look at a more tactical chart on Euro, this is fairly classic action, right? For students of price action on the way we move. We come back in, we had this big sell-off there on the FOMC. What happens? We come in the next day, edges to try and play for an inside day, not to try and play for a continuation. Gives you a chance to get long with very tight stops, looking for at least a move back into this mid area. We got to move back into the mid, and right now sellers tried to front run, sellers tried to hit it again, no way. Breaks higher. Right now it's back into the pivotal zone, into these lows around the 110. This is going to be the bull bear line for the week, but the way this is trading right now, we would suspect that because of the way the market is positioned, because the way everybody's talking about this, most likely the most pain that the market can cause, and we know that the market loves to cause some pain, is to clip stops above the 111. So we would suspect the market to slowly be very, very tempted to come out and take stops out above the 111. That's going to be a pivotal level for the week. Again, as far as we're concerned right here, right now, the longer term view does not change, but structurally here, this is just a range, and we look to play it as a range. Now, one thing which I'd like to caution on Euro is that, and if the data out of Euro, especially the latest inflation data, et cetera, means that the ECB is not going to do something drastic in December, and if Yellen or the Fed does not indeed hike rates in December, or at least as we start to get closer to December, the indication is that maybe the ECB is not going to have to be so aggressive, and the indication is that maybe the Fed is not going to raise. Do not be surprised to see Euro trading back at 115s. If the ECB and if the Fed or Yellen materialize, don't be surprised to see Euro trading at 05s. But again, remember, as always, it's good to have a long-term view. It's good to focus on the levels, but don't forget that there are always two sides to the coin and things can change. Aussie, what's going on Aussie? We're looking at, I'm not so sure. Yeah, I think consensus is for no cut out of the RBA. We'll have to wait and see. Look at this 50. This is a daily chart, 200, 150 to be pivotal for Momo and flows. If we hold below, and if indeed the RBA does cut, a surprise cut, I would expect the market to try very aggressively to take out those lows. If we don't get a cut and things start to stabilize, depending also on China data, then don't be surprised to see this move right back up into that 100 DMA. So right here, 50 DMA being pivotal for Momo and flows. A lot heavier than Kiwi. What's going on CAD? CAD, we discussed about the ping pong zone, 133, 132, 131. We've been talking about that zone for an awful lot of time. We said you can make a very good case for the upside. We can make a pretty decent case for the downside. We prefer the downside last week, but right now we're still in this range. Keep an eye that if, as long as we keep on closing daily and hold below the 31, we expect the 128s to attract. But again, a lot of choppy trade here. Remember, from a bigger term perspective, it's a really, really important area for CAD. So we'll have to see how this trades, but this is a really, really important support for the bulls to hold if they want to continue that rotation higher. Now, again, speaking of what, crude is no change for us. We talked about this for a long time, and we talked about it in real time, kept on saying on Twitter too, don't get excited by a break of the 43. What is important when you see all this level is, of course, it's going to be tempted to clip some stops, but it's the day close that's going to be important. If this closes below on the daily, then expect this to get a lot more Momo, but don't get suckered into selling this if we don't get the day close below. And look at this, pierce below, click some weak players, close back above, and bam, right back into the pivotal, into this chop range, right? So don't be surprised. I wouldn't be surprised to see this try and take a stab at the 150. I wouldn't be surprised to see this try to sell off. Right now, I still think it's a complex basing pattern, and if I have to take a guess, 6 months down the line, 4, 6, 12 months down the line, I'd say the next $20 are coming higher, not lower. We'll have to wait and see. And again, if it keeps on squeezing higher, it's likely going to help CAD shorts, right? In terms of the ES, we're right back into this pivotal level. Not an awful lot has happened. We discussed the fact that as long as it was holding a bid tone and it couldn't trade back below those 2050s quickly, we expected those 2073s to attract. That's our pivotal level for the week. Again, a lot of people will be looking at this daily close here. We won't necessarily read too much into this. We're not fans of trying to look at reversal candles inside a choppy range. Our outlook is still that it would be healthier to move back to the downside. Again, very choppy action. We've had a lot of moves on very thin volumes. Get used to it. This is the new nature of the way this is trading. But again, similar to some of the other charts here, it looks like it would be tempted to go to the upside. So I think if you had to assume something, you'd have to make an assumption for chop with slight upside bias, but we'd still prefer to be looking to sell the upside, not aggressively, not in a hurry to sell it, but we still think that the next bigger move will come to the downside, not the upside. If you're talking about the next 5 to 10% move, we'd expect it to the downside, not the upside. That does not mean that we're blindly selling into strength and getting in trouble. We're patiently waiting, watching for an opportunity. But right here, just look at I'd look at those 2073s from the day closes pivotal range, and you can go back to the other outlooks. We discussed this in more detail, but nothing much has changed there. Yen, again, we said don't get aggressive trying to sell a break here. Don't let this fool you. Don't get aggressive trying to buy break here. We still expect this unless something fundamental changes out of the BOJ, something fundamental changes out of the Fed. We still expect the 120s to offer gravitational pull, and if anything, we like to play for a move away from the 120 to play for a move back into the 120, not away from the 120. So not an awful lot has changed here, but some very good trading opportunities. And yeah, I mean, that's pretty much where we are. Not an awful, I mean, awful lot coming up. Some interesting moves. I think a lot of interesting trading should be setting up for this week. Let's see what happens. As usual, thanks for taking the time to listen to this. I wish everybody an awesome week, and I'll see you guys on Twitter. Have an awesome one. Take care, guys. Bye-bye.